Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. We got some economic data coming in across the pond. Industrial production out of Europe came in at 1%, expected to be 0.8%, and they revised last month's number up from 0.2% to 0.4%. Then here in the United States, we got PPI month over month came in at negative 0.1%, expected to be positive 0.2%, so a little bit lower than expected. There's not always that great. And then core PPI came in at negative 0.1%, expected to be 0.2%. So really not great economic data there. Not really seeing prices go higher, which would indicate demand in a sense. So when you see those numbers coming off a little bit, it kind of signals a bit of a lack of demand there. And then unemployment claims came in at 261,000, expected to be 246,000. So a little bit higher than expected there, means more people are claiming unemployment, meaning more people are looking for jobs. So not a great number there. Those people aren't necessarily getting hired then. Then natural gas storages came in at 359 billion cubic feet, expected to be 318 billion cubic feet. So more of a drawdown than expected there, probably due to the colder than expected weather across the United States and a lot of the snow and everything else that we've been getting lately. It's even cold down here in Arizona. All right, then on to the overall markets. If we look at crude oil futures moving, blasting higher. You know, yesterday we were getting this doji at the top of this move. Signals a bit of a top in a sense if it gets confirmed. It did not get confirmed today. It's staying above this trend line. It's going to act as support anytime in the near futures, in the near future, I should say, as we go forward. So that's going to act as support as it acted as resistance before. I got to adjust my lines here. This is goes back to the May highs. Just wanted to correlate that back in the day for 3 years past, but I'm going to need to adjust that too. Get it a little bit higher. Make it more of a solid number anyway. I just like the way that it lined up pretty closely to the value area highs, point of control, and things of that nature. Everything kind of filled in quite nicely there, but I'm going to need to adjust that now that it's above there. But crude oil moving higher with the tensions and things of that nature in the Middle East. Gold futures up just slightly, pushing up against this Fibonacci level that is going to act as resistance as it has in the past. That is going to be a pretty good line in the sand, up $3 for all intents and purposes, but just banging its head up against that Fibonacci level right there. And cryptocurrencies, on the other hand, are I don't know why I have Gilead there. I'm going to talk about Gilead here in a little bit, so let me pull that off to the side for right now. Anyway, let's look at cryptocurrencies. Something I wanted to talk about here. Crypto's off a little bit, $500 so dollars, into the 13 handle here. Yesterday, some of this sell-off basically came about when Warren Buffett was talking about. Now, millennials are talking about this old guy that doesn't know what he's talking about. Well, Warren Buffett does know what he's talking about, believe me. But the cryptocurrencies, he's talking about the bubble in there, said that he was buying a 5-year put in Bitcoin and basically all of the cryptocurrencies. He was buying 5-year puts. So expecting for a big bubble there, at least in the next 5 years. And Warren Buffett, he knows what he's talking about. So that was a pretty big headline news yesterday, but crypto coming off just a little bit today. Bonds off slightly. Yesterday we had pretty decent sell-off. I talked about it being down almost a point on the day, made a pretty strong comeback late in the day. Today we're getting counter-opposing candles here that has a tendency to indicate a continuation. I think it's, the probabilities are when these line up like this that it is going the other way. It doesn't necessarily mean it's not making a bottom here, but the probabilities are showing that that is continuation, generally speaking. VIX back into single digits today. Yesterday, when we talked about this, came up and tested that 200-day moving average. It can't get through it. It is a major resistance for the VIX. And I also talked about this, the VIX has been climbing despite the fact that the equities were climbing and having historical highs as well. That being said, today the equities are moving higher again. People were complaining. It was almost 48 hours since we saw an all-time historical high in the Dow. Well, we got it. Today, moving higher and near the highs of the day as we speak, maybe a couple of points off of that. With the Nasdaq, it has been 48 hours since we've seen an all-time high there. It's bouncing along this trend line that I've set up here. It's just slightly above that right now. It could, if it gets up there, settles above there. Again, I think that is going to stay above this trend line for a little bit. That being said, we aren't there yet. Didn't do it, a few days ago, but I think that, as we progressively move higher on this, that trend line is going to get breached, and it's going to kind of sit above that for a little bit. This is what I was talking about with those counter-opposing dojis here. That has a tendency to indicate a continuation pattern. We were actually seeing 3 of them there. So that has a tendency, when you get those counter-opposing ones, that it is a continuation to the upside. Once you saw it on, Tuesday, that looked a little bit toppish. Then it started to look like it got confirmed, but didn't settle there. So that isn't necessarily a confirmation. That counter-opposing doji leads the bulls higher today, up almost 9 points right now. And this is the breakdown of the E-mini S&Ps. Yesterday's big sell-off did not last very long, as we ended up in positive territory for the most part at the end of the day, at least from where we started today, just moving higher. Even though overnight inventory got long, we are pushing higher, looking to test this all-time historical high in the E-mini S&Ps. Now, a couple of the trades that I was going to look at here, they're thorns in my side right now. UPS just put this trade on and being tested as we speak, up, about $1 above my short calls on the 132s. I'm going to hold on to this. I'm pretty close to pulling the ripcord on this, to be quite honest. It shouldn't have happened this fast. That being said, if it happens this fast, it could want to go up and test this 100% Fibonacci level that I've kind of drawn in there from a 3-year high, but 135 looking like it wants to be tested. Therefore, I'm very close to pulling out of this. Earlier on today, I was ready to pull the ripcord. We started getting a bit of a pullback. They kind of sucked me back in to hold on, and now it's rallying. So I've got a real short leash on this one. I'm not liking that one at all. So I'm looking to pull the ripcord on that. Before I talk about Kodak, I want to talk about Gilead. This is another thorn in my side. It's pushing higher as well. Yesterday, it was looking like it was getting a little toppy, so I was looking for the confirmation to the downside today. Not getting that, so again, looking to pull the ripcord on both of those, UPS, Gilead. I think I'm done with those. Probably be covering those by the end of the day. And then finally with Kodak, something I wanted to talk about here. I tweeted this out actually couple of days ago about Kodak. Started getting this massive push to the upside, and people were talking, Kodak moving higher, up 120%. I even tweeted it out, Kodak up 120%. They must be considering doing cryptocurrency. And sure enough, the next day, yesterday, they released information on them doing photo coin or something along those, Kodak coin or something like that. So they are getting into the crypto space. That blasted off. I mean, up from $3 to $13 in 2 days. That is a massive move. Anytime anybody talks about adding blockchain and looking into cryptocurrencies, these stocks are just getting blasted off. I mean, they are rocket ships when they announce something like that. Kodak following suit with that today, giving up a little bit of upside. But that being said, it is still pretty volatile, and the overall market's looking to invest in anything blockchain related, obviously. All right, that's all I've done today. Just looking at a couple of things, getting out of, cleaning up my positions, heading into the end of this option expiration cycle. As you can see, a lot of stocks coming out. We have a lot next couple of weeks, so holding off on adding a lot of credit spreads, I should say, because I want to hold on to some margin for those earnings trades. And that's about it, you guys. Pretty boring this week for the most part. But Friday's webinar is going to be on the short call spread. So I'm going to show you how to set that up to increase your probabilities of success. It is a intermediate type of strategy. We're going to be expanding on this course as we go along. We started out with the beginning strategies. We're going to kind of move into more in-depth strategies, maybe even more risk. I'm kind of trying to weigh whether or not it's difficult to learn versus, whether or not it is appropriate for a newer trader too. So that kind of all filters into my thinking on whether or not it is a beginner strategy, intermediate, or advanced strategy. Okay, so that's all I got for you guys today. If you can't take that, take it easy.